Good evening. This is Semantics Research with the daily report for May 24th, 2022. In April, the new job postings fell by about 2 million to 6.6 million, according to data from Revelio. This represents the largest monthly drop on record. This shows that we are continuing to freeze hiring due to companies fearing recessionary effects from the slowing down of the economy. Many companies are lowering guidance and stating that supply chain issues continue to hamper profit margins, and in turn companies without much pricing power are hit the hardest. Companies in highly competitive industries will also be affected. It is likely that companies with pricing power that can pass on the costs of inflation to the consumer will likely have the best chance of weathering the storm. Looking at the PMI numbers, we can see that we are still expanding, so it is not as bad as above 50 is for growth. Below 50 is contraction. But we can see that we are still slowing down, though, with decreasing numbers from previous. Latest flash PMI data indicated that we are seeing a slower expansion in business activity across the U.S. private sector during the month of May. Manufacturers and service providers reported softer upturns in output amid high inflationary pressures and a further deterioration in delivery times by suppliers and weaker demand for growth. We saw that new orders across the private sector generally continued to increase during the month of May, but at the softest pace since August 2020. The rise in new sales was driven by manufacturing firms who recorded a sharp uptick in consumer demand, despite the rate of growth softening again from March's recent high. However, service providers reported that they saw the slowest upturn in new business for almost 2 years, as hikes in selling prices weighed on demand conditions, and the initial boost to demand from the reopening of the economy showed signs of fading. Meanwhile, input prices soared higher again, with the pace of increase edging up to a new series high since October 2009. Firms reported a substantial uptick in cost burdens, largely driven by a record-breaking rise in service sector input prices. The rate of cost inflation at manufacturers also accelerated and was among the fastest in the series' history. At 53.5 in May, down from 55.6 in April, the S&P Global Flash U.S. Services Business Activity Index signaled a solid upturn in service sector output midway through the second quarter. That said, the rate of growth eased to the slowest for 4 months and was well below March's recent high. Although the rise was supported by increased client demand, the pace of expansion was reportedly weighed down by hikes in selling prices and concerns over higher interest rates. Similarly, new business rose at a solid but softer pace in May. The rate of growth in new sales was the slowest since August 2020 and below the series average. New export business at service providers rose strongly, but at the slowest rate since the start of the year. Service providers registered the fastest rise in input prices on record in May, as cost burdens soared. Hikes in wage bills, interest rates, fuel costs, and material prices were all noted as factors behind inflation. Although firms sought to pass higher input costs onto the clients, the rate of charge inflation eased from April's record high and was the slowest for 3 months. Despite being strong overall, we can see pressure on capacity softened to the least marked for 3 months in May, as service providers raised their workforce numbers sharply. The rise in employment was the second fastest in over a year, as companies sought to fill long-held vacancies in jobs. Looking at the new home sales, we can see a sharp drop falling 16.6% to 591K, which is the worst drop since the peak of the COVID crisis, and before that, the taper tantrum in 2013. Overall, home ownership is becoming increasingly out of reach for many Americans as mortgage rates continue to rapidly run up, which compounds the effects of limited inventory and record prices. The average rate on a 30-year mortgage was around 5.25% last week, up from around 3% previously at the end of 2021, according to Freddie Mac. This is the report for May 24th. Thank you guys for listening.